tweet Nifties. So good morning, good to see you. Thank you for coming to today's session. My name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay.com, an ECN that allows Forex traders access to not just foreign currencies, but also energies, metals, stock indices from all around the world, and binary options, which I like to use for either scalping or for hedging cash positions. All the things you need to make you happy. So just imagine TradersWay.com as your happy factory. Oh, my pleasure, Igor. We do these sessions every single morning, 7:30 a.m. New York time. Gives you a couple hours to get ready for the New York Open. According to Forex, 9th of September. No, it's still July. It's amazing because in my part of the world, we're getting my children ready to go to school. Like, I keep thinking summer is over. And I'm like, oh man, it's all over. This is my last chance because summer's almost over. This is like the last concert. This is the last party. I'm like, what? But it's still July. But that's where we are. Oh, my mic. Yeah, I have a super loud mic, Demeter. So I'll move it away a little bit. So anyways, welcome one, welcome all. Today is the 29th of July, 2015. Today, there's TradersWay.com. Hello. Today is FOMC day. And look at all these trade ideas. These are all for today. Major currency outlook, Euro Aussie by Kate, USD Swiss franc from William, Euro Yen from YJ. Awesome. Oh, here it is. This is the one I wanted to point out. Today we're going to do a special event to cover the FOMC interest rate decision, and really more importantly, the announcement afterwards by the Federal Open Market Committee and Janet Yellen, the chair of the Federal Open Market Committee and the chair of the Board of Governors. So what I thought I would do today is 1 hour before the news, take you through a complete overview of the Fed, the FOMC, and what they do. This would be like a formal PowerPoint presentation, educational, inspirational, and all those other wonderful things. And then the news is going to come out and we can trade that together live. And that'll be at 2 p.m. So it starts at 1 p.m. New York time. That gives us an hour for me to give you a currency trader's guide to the Federal Reserve Bank and why it matters, and then we'll cover it live. Whoop, whoop, as Demeter says. And this is for clients that have live accounts at TradersWay.com. No minimal balance. If you have $1 in your live account, you will be able to access the page with the webinar on it. So again, starts at 1, goes for a couple of hours. It's totally free. You just have to have a live account open at TradersWay.com. So if you're on a demo account, pop in a couple $100. What's the big deal? And while you have, by the way, while you have a live account, even if it's only a few $100, maybe you'll consider trying binaries. You guys want to do some binaries today? Because I don't believe there's a demo account for the binary platform. So maybe if you just put in like $300, you can access today's webinar. You'll get your MT4 account where you can practice some things, and then of course you could practice binaries as well. So I'll send out an email. Cool, huh? Yeah, Kareem's like, cool, my account balance is small, as long as it's $1 or more. When am I going to send out the email? I'm going to send it out after today's event. Okay. So Ron says applause, and whoop whoop, lots of whoop whoops. Cool. Well, pleasure, compliments of the firm. My pleasure. All right, so let's go on with the trade. Oh, I have to do the disclaimer. Let me remind you that trading and investing is risky, not appropriate for everyone. Your past performance, good or bad, is not indicative of future results. So, I personally recommend that you stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Now, many years ago, I used to tell people to start on a demo account first, and I got in a long, expensive fight with the National Futures Association because they thought that was bad advice. They said you should never tell an amateur trader that. Does that sound right? Like I actually, what I did is I made a television commercial, and at the end I put in a disclaimer, and it said, practice on a demo account before, risking real money. And they got really mad at that, and I had to redo the whole commercial. It cost me thousands of dollars. So I had this passionate discussion with the NFA, and they said, no, absolutely, definitely don't tell an amateur trader to start on a demo account. Do you know why? Because that would be telling people that past performance is indicative of future results. Because if you were successful on a demo, well, then you'd be successful in a live account. Isn't that just backwards government thinking? Weird, huh? TradersWay.com. The other interesting thing is past performance does not predict future results, but I have to show 5 years of trading history to a potential investor. And then tell them none of this matters. Like none of this makes sense. But anyways, let's get going. Good to have you. Good to see you. How you doing, huh? We had a pretty stern conversation yesterday after a technical analysis. How you feeling? Emotionally, I mean. Ron says, excellent conversation. Good. Manuel says, struggling, needs help. How are you doing with identifying support and resistance? Because remember, I think that's just the absolute most important thing. If you can't find support and resistance, then everything else is just moot. Because you'd just be losing money and you're like, man, I just don't get this ADX thing, and oh, I don't get this other thing. No. You just can't find support and resistance. Igor admits that that's his biggest problem. That's cool. Thank you for admitting that. So like yesterday, I did this for you, right? We had a low. We were way up here. So one thing that we did is I grabbed this kind of area here, and I threw on a fib and found the 382 to 618 Fibonacci retracement. And then, of course, I noticed that this, this touch here is on the 618. Okay? So I'm thinking I really want 618 because 618, right? Retracement. 382 is just too far away, but that is the first opportunity. As you can see, we had a trade plan yesterday. And then I also see in here a weekly central pivot point at 55, at 54. And then if you could squeeze it as far as your stop loss, the monthly central's in there. So wouldn't you agree that the 786 monthly central is a level of support? The 618 roll reversal weekly central is support, which is just around that 50% as well. And then even 382 if it's super aggressive. Right? Okay. That's so, but yesterday we were way up here when I drew this, right? I'm just like, you know what? And I believe I even had a trade plan that I grabbed with my Snagit. Hang on. Oh. So look what I did yesterday. Put in an order to buy a 50% retracement. The 50% retracement was 58. Okay? Knowing that just below that at 54, we had the pivot. And right? And then just below that at 48, we have the 618 roll reversal. Okay? Do I draw every single trade to make it and snag it? No, but it's helpful, right? So it's almost journaling. I'm not journaling like I did in my first couple of years, which was very detailed. In fact, I would print out every trade back then, and I bought a leather-bound book that like a notebook, you know, with three ring binder, but leather bound. It was like $80 or something because it mattered to me. And then I had it all in different sections. So every month I would have a different section of all my trade printed out, but I had all my notes. So anyways, but so this isn't quite that detailed, but it's something, right? But I'm just going back to our conversation yesterday that when we were way up here, that's what I was thinking. And then, okay, that's what we had discussed as a team. And then when it came down to it, at the time, you could see we were bouncing at the 382. Did I buy this? No. So I document that I want to buy at a 50% retracement. So I placed an order, because you notice it says I'm just simply considering the order. So I placed an order, a working order, at 60. Okay? So inevitably it came down and it put me in. It went like da, 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 boom. So it only matters that it was support. Now it took a while to get there. My order was buy at 60, out at 50. And I apologize because it went to 54, so I left 4 on the table. My bad. Cool, huh? John's so funny. When do you find time to do my actual trading? You're so funny. John, have you been to webinars with experts that don't actually trade? I had this funny experience years ago. I was at one of the Forex trading expos because I used to speak at all the conferences, all of them. And at that time, I had finished writing my book, and I was doing a lot of magazine articles and stuff to promote my education service, my book, all kinds of things. So I was writing for like 6 different magazines, right? And let me tell you, I was struggling. It was so difficult. But at this time, I noticed that there was this woman that wrote every magazine on the planet she was writing articles for. I'm like, I felt lame because I was struggling to do it I didn't have enough time. Like I was really down, like there are people whooping me. She can do it, why can't I do it? You know? She probably is married, she probably has kids just like me, and she probably gets tired and all that kind, just like me. And I'm like, I'm not manning up. I got to try harder. So anyways, one day I'm at this Forex Expo in Vegas or New York or something like that. And I bump into her. I'm like, holy smokes. I got to tell you that I'm really impressed. Because I've noticed that all your articles, and I'm trying to do the same, and you're just amazing. Like, how do you do that and still have enough time and energy and focus to trade? And she said, well, I don't trade. I couldn't believe it. I'm like, what? Oh, well, I don't trade. I just write articles. I'm like, oh no. She just flat out, not a problem. Wasn't even embarrassed. So I'm like, oh man. So John says, no, I know what you're saying, John. How do you do it? John, I'm exhausted. John, I'm up in the morning. I'm up at night. I'm trading during the day. Sometimes I wake up at midnight. Sometimes, I'm horribly exhausted, John. All day, all night, all afternoon. Asia, New York, London. So, yeah, so anyway, there you go, dude. Yeah, I'm telling you, it's 7:56 in the morning, and I could go to bed right now. I could sleep a full night, right? But anyways, so this is what our trade plan was yesterday, guys. And the big part of the support, to just kind of to wrap up the conversation. Okay, do you guys remember some of us? I don't remember who. Some of us were going to look for double bottoms at support with 1, 2, 3 patterns. Right? And they were to represent a change in direction, correct? Right? How many people are practicing that? Right. So that would qualify, right? Take care, Kareem. Yes, see you at the live event this afternoon. So that's an example. Is the support pivot a logical area for that type of pattern to occur? Or is it a random walk? Because if you can't predict it, you can't trade it, right? Right, not a random walk. Cool. So it all started with a logical role reversal, right? This is actually a change of trend. Double bottom is a reversal. 1, 2, 3, the market has now reversed. Does everybody follow me? I know I've covered this at least a dozen times at these sessions, right? And some of you, after me showing you a dozen different examples, I think were impressed enough to say, well, that's what I want to try doing. And I said, yeah, in fact, this is where you could start. If you could just find these patterns, you could probably have a trading career with just that. But of course, over time, you'd fold in some more patterns, right? But you'd be an expert at this first, right? All right, well, there's one on the pound yen at the weekly support pivot. All you had to be is a bull. Oh, Emmanuel, we'll get to that later, okay? All of that is inconsequential if you don't know where support and resistance is. Okay? So then the follow-up to that is the change in trend. Okay? Double bottom, 1, 2, 3. Now, let me change colors here. Higher high, what do I do now? So the first part you should have known what to do. Now what do you do? Don't say wait for a retracement. Don't say that. Hammock, don't say that. I mean, all those are fine. So, right, specifically, I'm looking for something somewhere between the 382 and 618 Fibonacci retracement, right? Remember, I don't like things like Fibit, because a lot of people don't know what that means. Buy the pullback. Well, where? Right? Get ready to buy. Buy what? Buy when? Right? It's important that we have specific language, right? So the first thing that I typically do is I take the old resistance and I make that a potential support. But I also look at things like the actual fib levels, pivot points, psych levels. Do you see any of those here? Well, that is the psych level. Is it predictable that price, now that it's made a higher high, comes down and then heads up? Yeah. So, was it the moving average? Was it the oscillator? Was it a pivot point? You know, all these different things. If I used an ADX and an RSI and a CCI, would any of it had mattered? I mean, they're all nice. It's nice to have an algorithm that gives you funny little colors. I like technical analysis. I like my oscillators. I like the moving averages. But all of it is just, they're algorithms that help you see and analyze past price action. And they tell you specific things. And the vast majority of people that trade don't even know what the math is telling them. Now, they might swear by the RSI, but then they won't know what RSI is actually doing. So it's a giant leap of faith. Mine is, oh, Igor says, what? Hang on, I'm not. Let me open the room. I'm not getting in the chat room here. Hang on. But that line, go now, that too thick for support and resistance? No, 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 no. I humbly disagree. So the way I do it is a couple of things. I say somewhere between the 382 and 618 Fibonacci retracement. So I analyze this. I go 382 to 618. Somewhere in there I want to buy. Then I look for the roll reversal, and I look at this. So I'm thinking, all right, 382 is going to be attractive. And then I look at other things like pivots and Sykes, and I see, oh, snap. Yeah, there's something here. And even if it came down a little farther, I got a weekly in here. So this 382 to 618 is perfect. Okay? Right? So then what? Well, when we approach this area, do I stay on the 15-minute chart? Yeah, so this is one, guys, if we're in that spot, I drive into a 5 or even a 1, and I pull the trigger. But see, I'm not deciding at that point what to do, am I? I knew basically here what I was going to do for the rest of my day. Double bottom, higher high, higher low. Okay? I knew there what I wanted to do. Once I see the double bottom, higher high, what do I do? What should you do? I've taught you this, right? Over and over and over and over again. Somewhere between the 382 and 618 Fibonacci retracement, you buy it. Makes a higher high. What do you do? Somewhere between the 382 and 618 Fibonacci retracement, you buy it. Okay? Guess what I did with the next trade? Made a higher high. So first thing I do, identify the 382 to 618. 382 is way up there in la land, right? Is there anything special about this? 80? Should I be buying at 80? So then I look at the sweet spot again. There's a weekly pivot and a 50% kind of 618 overlap, and this little or the old resistance should be support. So the 382 is at 80, but I'm really thinking 50%. So instead of pulling the trigger, I just throw down an order because there's so much going on there. I simply don't want to miss it. So I threw down an order at 60, and I got it. Snap. It came down to 50, but I got all that support, and it turned around. Notice I had to wait another hour before I caught the trade, though. You see how this, like, we're kind of what? Touch. We're in here. So there's the giant red candle that we're looking at now, and then so it took another 45 minutes to an hour, before I actually got it. Nice, huh? Yeah, so Igor says, but if it kicked off the 382, so how much money did I lose if that was the case? Shoot. Yeah, opportunity cost, right? But this is the pound, the pound yen. I've traded it enough to know that if I trade on its terms, I'm like, well, I don't really want to buy it at 80, but I'll buy it at 80. I get my butt kicked. Okay, so I identify the support and resistance, and we actually did this yesterday, right? But then I ask myself, where do I want to buy it? And wasn't that part of our conversation yesterday? Are you a bull or a bear? And at what price do you want to buy or sell? That's all that really matters, right? If you're a bull, you buy at support. Good. So where do you want to buy it? So I said, well, I want to buy it at 60. I don't want to buy it at 80. Oh my God. I don't know what you just posted. Well, what am I supposed to do, Igor? Am I supposed to read that? Oh, whoever posted that. I don't know what's going on. So, okay. So, anyway, so that's that. So, like I said before, the most important thing to your trading career is support and resistance. Because without that, you don't know where to buy or sell. Then the next thing is to know whether you want to be buying or selling. Okay? What do you do to make that decision? When you say draw, do you mean actually draw the image? I just grab the rectangle and I go zoop. Okay. Well, that's what you said. All right. All right. Well, the exact rules. Wow. The exact rules. Oh, it's too thick. Cut your lot size, or yeah, cut your lot size in half, Igor. What's your typical stop loss, Igor? How many pips? That's fine, but make it 50 for now, okay? Cut your lot size in half. Always have a 50 pip stop. Try that. I'm not joking. Cut your lot size in half. Use 50 pip stop. Well, then get a second job. Save your money. And I'm not joking about that either. Right? I need you to have right now a 50 pip stop to give you leeway for inexperience. Okay, so if you're trading micro lots now, then that's as small as you're going to get. And if you don't have enough money, get a second job, sell something, I don't know, and then get enough money. And then you're going to need 50 pips, and then we need to analyze your trading results to find out if your lack of success is coming from your entry. So you do the stop loss from 3 to 6. Well, honestly, to me, the stop is the least important aspect of the whole thing. So if you always had a 50 pip stop no matter what, then you'll always know how much you're risking. But the thing with me, let me give you an example. Okay, let's say we had this pattern that we had earlier. Okay, so my job is to wait for a pullback, 382, maybe 618, and buy a sweet spot, right? So let's say it comes down and I get a little bounce and I buy it. My stop might be 50 pips away, and my stop could be way down here, completely unnecessary, right? Completely unnecessary, it's so far away. But not a problem. And then it does this. What do I do? Yeah. Take a 22 pip loss. Move on. So it doesn't, to me, it just doesn't, my stop loss when I'm trading, like I'm in front of my charts. My stop loss is only for catastrophic failure. That my neighborhood loses power. My computer goes down, but even then I have backup redundant computers. If my internet goes down, I have backup redundant internet. But whatever. If I had a heart attack and died at my desk, my open positions are only going to lose 50 pips each, and my family will be protected. Okay? So I manage to trade. Now, if I was going to go to bed, then I'm going to move the stops more appropriately, and I might actually move my stop here, right? Just below the lowest low. So the question remains, you think my support and resistance is thick? Why? Because I have like a 15 pip zone in which I want to buy? See, to me, that's not thick at all. So now we're being subjective. And then I drop into a 1 minute. What am I going to do now in a 1 minute? Look for a setup. See, my support and resistance, they're zones. So when I get into my zone, I get into a different time frame. And I'm like, I'm going to trade the 5A cross. I'm going to trade the 5A cross. I'm going to trade the 5A cross. I'm going to trade the 5A. I'm going to trade the 5A cross. I'm going to trade the 5A cross. I'm going to wait for, and then it does this. Guess what? I'm long and strong. Why? Because it did this? No, because it did that in my zone in which I've already decided to buy. And that's a reversal pattern that's bullish. So I'm long and strong on the 5. Done. Trade on the 15. I look at the daily, I look at the 4 hour, I look at the 1 hour, I look at the 15, I look at the 5, and I look at the 1. And then I correlate it with other currencies, and then I correlate it with stock market indices and commodities. Where do you draw it? I draw it on all time frames. So you have to remember it's everything. It's not one. So look, let's say I said this. Let's say I want to buy this. Okay? Let's say that was my beautiful, amazing strategy. Okay? Look, I've done. That's my strategy. Now, it might be a flawed strategy, but I don't know. I look at it and I say, well, it's at the 3-minute 200 EMA. Not suggesting that's good, but I could. And there's a bottom, and I just going to go up. Good, done. Now I'm going to buy a reversal pattern. If not the 5-minute, how about the 1 minute? I could be sitting here saying I'm going to buy the 5A cross on the 1 minute, or let it do this. What's important is that I'm here. That's the only thing that's important. I don't care why you pull the trigger here or what pattern. The oscillator. I mean, none of it matters. Whatever makes you feel comfortable to be long at support. Because even if you're wrong at support, you're not going to be that wrong. Okay? You understand? Now, Lawrence says he uses weeklies too. I caution people on that. The reason I caution people on that is when you go that far out, that is pure technical analysis. That's 100% technical analysis. And I do disagree with that. Because the fundamentals have probably changed. And you'll say, well, look at last year at this time. You know, look at 62 weeks ago. I'm like, yeah, but you know what? We were not thinking about raising interest rates 62 weeks ago. And that's where the past performance will, in many cases, predict the exact opposite of what future results are likely to be. So, for example, for 1 or 2 years in a row, risk on meant sell the yen. And all of a sudden, for another year or two, risk on mean buy the yen. And all of a sudden, we were doing the exact opposite in the same market conditions that we used to. Well, the fundamentals changed. So, yeah, I guess if you're only doing the support and resistance levels, but yeah, I guess if it works for you, right? But I tend to not use them just because my strategies are very much fundamentally based. Global macroeconomics is my key lead on my thinking, right? So anyways. Okay, so support, most important. So look at this, I could be completely wrong on this currency pair, but still making money. And all I want is you. Good discussion, guys. So that pound yen is now up 100 pips. Oh, the history indicator is a pivot point, Joseph. Yeah, so Emmanuel, work on that first. Don't worry about anything else, and then we'll come back and we'll fold some other things into it. Okay? John, I don't scale in and scale out. I've always said scaling is for fishermen, but there's nothing wrong with that, John, at all. So put 1/3 of your trade at the 3A2, 1/3 at the 50%, 1/3 at the 618, that kind of thing. Sure, love it. I would say it would get complicated managing your stops. So you probably would have this. What I would probably do if I had 3 open trades that were basically the same trade, I would drag, and let's say every stop had, I don't know, 25 pip stop. Once all 3 were in, I would probably move all 3 stops to the closest stop so that they were the same, or I would automatically trail every stop. Well, all right, so the next question is, where's my target? Well, I mean, every time that's going to be different, isn't it? I don't know the trade. But you know that a 618 predicts a 1382 and a 382 predicts a 1618. There's a start. Then look at pivot points, both daily, weekly, and monthly pivot points. Look at average daily range. I don't know, are you scalping? Is it a spot? Is it a swing? Is it I mean, all these are different questions that would affect where the exit is. So I would start by saying, well, what's your strategy? Right? And you say, Wayne, it's a position trade. Well, why would I tell you to get out at 25 pips profit, right? I mean, clearly wrong. So a spot trade, fine. How long does a spot trade last? 2 hours. 2, maybe 3 hours. Okay? Where's it going to go in that course of time? What's the average daily range? If you bought at support, where's the next level of resistance? How far away is it? What's the volatility of the market? Are you in pre-London, or are you in New York afternoon, or is it the Asian session? All these things are going to affect that. So remember, you're not in control of the market. The market's in control of the market. So it depends on the market conditions, right? But sometimes when let's say the market is a bit slow or something, I have no problem doing like a 25-25 OCO. Not a problem in the world. And some people will say, well, Wayne, that's a 1-to-1 risk-reward ratio. Whatever. I can hit that in and out. Because what will happen is it'll go up about 25, give me my profit, and then it's going to pull back, and then I buy it again. But whatever. All right, so USD Kitty CAD. We've had this one set up for a while. We're in an interesting zone. And you got to measure that, if you will. We had a question about oil. Sure. So let's go over to the oil pits. You say you want... So again, how many people can confirm that in April we talked not just talked, but actually drew out the price act for a very significant drop in oil? In fact, we had this set up not just in April, but in December. Isn't that crazy? That in December, we identified that at some point, the drop in oil was too much, and that at some point, we're going to have a 3A2 Fibonacci retracement. So here's the little micro moves. We made it up to here, and then we come around. It took a little longer than I wanted. But now, we don't know. I didn't predict a lower low, though, right? We know this is supposed to go down to like 14 or something, but I've never said that, have I? But what I did say is likely top, okay? And that, maybe the reason there's an orange line here is maybe we come back down to 44, right? No joke, right? Well, I'm 78% correct here from picking the exact top and where the likely bottom would be, which I have is here. I think we can call that about 78%, which is, what is that, a B minus or a C plus? I guess it's a C plus. I give you 4.5, maybe 5 months lead time to prepare. You might want to bump that up based on the lead time. Is it better than a C plus? We're looking at right now approximately $20 drop in oil predicted 5 months in advance. No? Nobody likes that, huh? Demeter. There's no way that that could be true. You know, some of you guys know that I'm a 40, how old am I? 43? I'm a 43-year-old college student. If I got a 78% in my class, in my classes that I'm taking, I will pass the class, but they won't allow me to graduate. Which is another way of saying that it doesn't count. To me, it sounds like you'd fail, right? But they're like, look, you took the class. If you want to count it when you graduate, you're going to have to take the class again. The 80% is the minimum. If you don't get an 80%, you fail. No, I'm an old man, Mike. Yeah, so at Harvard, if you got a less than 80%, you'll fail. They'll fail you out of school. How awesome's that, huh? All right, so cool. And luckily, I'm a Forex trader. And I say 80%, that's easy. I party in a world where, 95% of people die. To me, it's just a big old party. I juggle chainsaws and guns for fun. Yeah, if you once you really get into Forex, wait till you go to some like gambling resort like Vegas or Macau or Monaco or something. Gambling just looks stupid. You're just like, just like not in, just why would you gamble your money when you can just make your money, right? So anyway, so I'm trying to think of what else we want to do here. Gold is hovering around the area, but again, this is stuff we've talked about even a year ago. I don't really have anything more to add to a lot of these things. They're just here. Charles goes with the pound euro pound. I don't typically trade that one. I know it's weird, isn't it? So I don't have much comment on it because I don't really track it. I use euro pound to try to discern whether I want to buy euro USD or buy pound USD. So like right now, I'm in the mode of I want to either sell euro USD or buy pound USD. Okay? That's how I use this one. So if euro pound is going down, I'm probably selling euro dollar. Or buying pound dollar, depending on the situation, based on other new information, right? That's so funny, Demeter. So if I'm going to university in the United Kingdom, and you got a 75%, that's an A. If you got like a 78%, an 82 is an A. That's the best grade. Oh, an A5. All right, so I don't know what that is. I'm working on like a graduate degree for capital market financing. So like the class I'm doing now, we're using central banking data to correlate the cause and effect of various capital market derivatives and interest rates. Yeah, but I'm only doing it because chicks think it's awesome. I'm just doing it for the chicks. They're like, oh, that's hot. Oh, that's hot. That's so sexy. Yep. Hey, well, I gotta be honest with you. That's so sexy. Yeah, Demeter, it's so funny. So I just can't get over that. So if you get it over 74%, you get a first class degree. And yet at my university, if I got 74%, I wouldn't be able to graduate. Isn't that amazing? I basically fail. They would fail me. I would have to take the class again. It's amazing. Let me tell you, it's hard too. Holy crap. It's hard, man. I'm telling you. But I'm looking forward to data mining the Fed stuff. I'm really interested in that. Because, you know, if I learn it, guys, I'm giving it to you for free. I'll tell you what, like, for every, let me guess, for every hour in lecture, I probably spend 15 hours studying and doing homework. I mean, it's hard. Yeah, right, Gordon. So anyways, so here we are in this cycle. What are we looking at? Okay, Euro Pound daily. What does this tell you? Well, either Euro's falling or British Pound is rising. Okay? So I'm kind of looking at it like a channel. Right? That's one thing. Second thing is the 55's in control. So it's not clear that we're going to make a bottom. We may not. So my next worry zone is going to be about here. See, if it was a very clear trend, the 21 would be in control, and there'd be no doubt in my mind that we'd make a low, and we'd have a pattern like this. But we don't have that scenario, do we? We have the low, we have the 55 in control, we have a small low 55 in control. So maybe at best a small low, but the way I think of if the 55 is in control, I'm going to assume a double bottom at best. So now to throw in, we have to overlap these pivots and stuff. So I notice there's a pivot cluster. Looks like weekly and monthly pivots, monthly support pivot, weekly reversal pivot. So now in my mind it's certain that at best we fall here. So the British pound is going to beat the euro till Friday. Okay? Oh, yeah. Aussie dollar. You say you want diamonds on a ring of gold, you see. All right. Yeah, we threw down one, is it here? The first one, right? It was the first one. If I remember correctly, I had 15 pips profit. It fell to a psych level, and I jammed my stop and got kicked out at break even. So I can't even see the price here. Let me zoom in. Where are the psych levels? What is this? I can't even see it. Where are we? 73? You say you won't. Where did we have a sell yesterday? 0.73. You remind me. Honestly, I don't remember. Excuse me. I think I can where it was. I think I think we sold here. No. Honestly, I don't remember. What is this? 4 hour? Oh, we were here? I know what happened. Okay, good. I know what happened. We sold here. I was short at 16. That's right. I remember now. I was short at 16. Yeah, here's what happened. I shorted. We came down. I jammed my stop. I got knocked out. But if I also recall everything correctly, timing-wise, I jammed my stop here, but then I longed the pound yen. So this came out. I was up 15 pips. I got knocked out at break even, but I was already long on the pound yen, so I already moved on. That's the thing, guys. Don't stare at trades. Move your stop to break even, get another trade. Move your stop to break even, get another trade. Move your stop to break even, get another trade. Move your stop to break even, get another trade. Move your stop to break even, get another trade. Move your stop to just move on, man. MoveOn.com. Inevitably, what most people do is stare at their open positions. In particular, if they're losing money, they just sit there and watch it. Down 20, down 10, down 30, down 20, down 15, down 25. And you're just sitting there for hours staring at this bad trade. Meanwhile, you missed like 5 excellent trades. There's always a better trade you should be on. So once you can reduce risk on a position, so let's say your daily limit is maximum loss of minus 50 pips. Do you guys have that in part of your trade plan? You know what your maximum daily loss is going to be? So for example, when I fund people with real money, their maximum daily loss on a day is 900 US dollars. Actually, it's euros. 900 euros is their maximum loss. They're not allowed to lose more than that per day. So they know the cutoff point. And then if I increase their money, I think it goes to 1,600 a day. Maximum loss. 1,600 euros, right? 2,000 bucks. You're not allowed to lose more than that. All right, so you need to know what your max is, your out, your uncle. Okay? So anyways, let's say your daily maximum loss is 50 pips. and you short here, you put a stop way up here, there's your 50 pips. Okay? Let's say it makes a lower low, retest the resistance, and then makes a lower low. You move your stop down now from minus 50 to minus 25. You know what you should do? Go find another trade you can trade with 25 stop loss. Get another trade. And then more time goes by, jam this one at break even, find another trade. So now you can maybe get 2 trades with 25 pip stops each. And then this one goes to break even. Go get another trade. Do you really want your numbers to get impressive? Because this is what happens. People get so upset. Wayne, 60% of my trades are break even. Yeah, so what? So if you don't like it, I have a good solution for you. Move every single trade that you move to quote unquote break even, move it to -1. So every one of those trades gets recorded as a loss. Okay, so 60% of your trades, you said break even. Well, now 60% of your trades lose 1 pip. So that means now we got 40% of your trades left. Okay, and let's say out of that, 50-50 are either winners or losers. What does it do to your statistics? Let's just assume your winners are bigger than your losers. That should just be a given, right? So let's say typically when you really do take a loss, you lose 25 pips, but your winner is more like 40 pips. So let's say 20 and 40, okay? Typically a real loss is 20 pips, and your real winners are more like 40 pips when they all average out. But what happens to the stats that you report to your clients? %20 of your trades lose 20 pips. %60 of your trades lose 1 pip. What's your average loss? What? 60% of your trades lose 1 pip. 20% of your trades lose 20 pips. So what's your average loss? 8 pips? Oh, no, it wouldn't be 19. The vast majority of your trades, 80% of your trades, right, result in a loss, but a loss 20 pips. The vast majority of your trades, so DeBeest has actually figured it out, 7 pips. Yeah, no, that makes a lot more sense. 7 pips would be about right. I said 8, but whatever. But what's your average winner? No. I said 60% lose 1 pip of the 100. 20% lose 20. So that counts for 80% of all your trading. Okay? Your average winner is 40. No, we're not talking percentage, we're talking about pips. Right. So your risk-reward ratio Your win-loss ratio, right? It's like almost 5-to-1, right? And what does your client say when he reads your statistics? When you lose, you don't lose very much. When you win, you do quite well. Genius, genius. It's not doing anything wrong. You're just not breaking even so much. It's just, I get people all the time complain, oh, wait, so many of my trades break even. Well, then take the loss. Or stop mismanaging all your trades. I got to get them, you'd move your stop way too early. I can't take a loss. I can't take a loss. I can't take a loss. I have to have perfect numbers. Nobody wants perfect numbers. They want you to make money. And they don't want you to do it at the sort of by increasing risk. Okay? There's two things the client's going to look at. One, how much money do you make? Two, how much risk do you take? Those are the only two questions. Oh, you guys want an indicator? What? Which one are you asking about? Probably none of those. Oh, you want the sessions one? Yeah, I have probably two different ones. So this is the one you want, right? Here, let me open this up. You see, this one's called 4 sessions. Google it, Google it, Google it. I don't remember where I got it. If it's for sale, I paid for it. If it's not for sale, I got it somewhere. Let me tell you. No, I don't use that one, Marina. Or unless that's the official name. Yeah, I don't know. Let me get you this. Oh, it's not even programmed very well. It should have information about the developer right here, but no. All right, so I can't get you any more. Mine's called 4 sessions. There's nothing to indicate it's called session break. But whatever. Do some Googling. But let me say this. If it's for sale somewhere, pay the producer of this intellectual property the money they're due. And you use it and it says, hey, I like tips, send them $25. Pay them the money. Okay. So look, we have a long day today. It's almost 9 o'clock in the morning. So why don't we call it a day? Well, not a day. Wrap up the session. Remember, I'm going to send out an email, or you can get more details here about the FOMC event. I'm going to do it live today for clients at TradersWay.com. And this is probably the most important FOMC meeting in 6 years, 7 years, 8 years, since maybe QE1. or maybe the taper. You know, very, very, very much anticipated meeting. Every market participant on the planet is going to pay attention to this meeting. And because we're talking about the valuation of the reserve currency and interest rates on, you know, U.S. Treasuries and interest rates on the Fed funds rate and the prime rate, it's unbelievably, incredibly, absolutely, totally important to everybody. I don't care if you're, let's say, you're a finance officer for Toyota in Japan. That person is watching this event because this is the most important thing for things like exchange rate risk. But if you're a bond trader and you're trading down, up and down the yield curve, this is going to be important. If you're a commercial bank and you borrow off the Fed funds market, this is important to you. If you have a mortgage or a credit card, this is important to you. Just absolutely every person on this planet that participates in a capitalist market. Look, if you're a caveman, you're a caveman. Nobody cares anyways. This is important to you. And the people with power and money are paying attention to this event today. So I don't want you to trade it alone. So I'm going to take, let me tell you how important this is. You guys asked me to do this first and foremost, so I set it up. But you know what I was scheduled to do today? What am I giving up for you? Okay, so calling up my golf buddies and saying, hey man, I'm not going to golf today, that's not that big of a deal, right? I was scheduled to take my children to the amusement park and go on roller coasters. So would you like to tell my 8 and 9-year-old that we're not going to go on roller coasters because you and I are going to trade the FOMC interest rate decision together? Would you like to take that job? You want to look into my daughter's eyes and say no roller coasters today? Because I need Daddy to help me with FOMC? Yeah, well, so I'm putting it all on the line for you guys. I tell you, every day, I tell you, I love you. I love you, man. I want you to succeed. I'm here to help. So put in a couple $100 at a live account at TradersWay.com, and I'll see you this afternoon for the FOMC. I'm going to start an hour early. I'm going to teach you everything you need to know about central banking policy, the Federal Reserve Bank of the United States, the Federal Open Market Committee, what they do, and what they do specifically at FOMC meetings. And then we'll trade the announcement together live. What do you stink? Smell like a plan? Awesome! So peace on earth, may the pips be with you, may your profits be above average. I hope to see you at the event today. Cheers.